G'day, Binanceans, and welcome to episode 10 of Binance Beach. I'm your host, as always, Liam Odo, and I'm stoked today to be joined by my good friend and colleague, James Quinn Kumar, who is our ANZ Marketing Director. James, thanks so much for jumping on Binance Beach.
Thanks for having me, Liam. Very honoured to be selected for the prestigious episode number 10. You're doing great things with this. So, glad to be part of it.
Awesome. Well, let's kick on into it with our usual market update to start things off. Now, in the episode description, I wrote that it's been a bit of a boring few weeks, and it definitely feels like that from a market's perspective. Even though we're down about 5.5% on the week for Bitcoin, dropping from around the $59,000 level down to $56,000 today, it's definitely felt very flat, very boring. I feel a lot of disinterest on crypto Twitter in the last couple of weeks. So I'm going to definitely be watching for some major catalysts in the next couple of weeks because, yeah, it really feels like there's not a lot moving at the moment. A lot is in a holding pattern. If you are interested in looking at catalysts, I definitely suggest our video from a couple of weeks ago, which dived deep into why and when the market might move. But for today, we're just going to kind of call Bitcoin boring for this week and keep on moving. For Bitcoin dominance, we're sitting again higher on the last 7 days, or still fairly high on the last kind of little while at 56% for Bitcoin dominance. The fear and greed index, particularly for the last week, has continued to sit down. We're sitting down at 34, which is well in the fear range at the moment. So definitely not a lot of positive market sentiment out there. Definitely some boredom with sideways and slightly down price action. To cover off on the ETFs quickly, again, not a lot to report from these in the past week. Slight outflows for the last few days, slight inflows for the days before that on the Bitcoin side of things. And for the spot Bitcoin ETFs, they were nearly net zero for a few days, a couple of days of outflows. So again, like we're not seeing anything major to call out or report here. It definitely feels like ahead of the US election and ahead of September, with potential US rate cuts coming, we just have a lot of stagnation in the crypto markets. Looking across the alts, though, it's definitely a bit more of a negative week or a lost week. BNB was down 5.5%, Solana down nearly 7.5%, ETH 5.5%. So some pretty notable falls from the major altcoins. Toncoin, of course, down 12% due to some other news based on the Ton ecosystem in the past week. Chainlink 8.6 down. So we're not seeing a lot of positivity across markets. And I do think we're really waiting for a major catalyst. But anyway, that's okay. We continue to hodl on. James, are you bullish? Are you bearish? How are you feeling about markets right now?
I'm low-key bullish. I'm quite boring, right? I quite enjoy this period of sideways action. Much like my surfing, I know you're the pro surfer, but give me 1 to 2 foot waves on my 7-foot foamy and I'm all good. So yeah, I've just been dollar cost averaging in, slowly accumulating through the sideways period. But yeah, bullish over the longer term for sure.
Awesome. Me too. Let's stay bullish. Let's stay optimistic. In terms of some AU macro news, there were a few interesting call outs this week. And again, I'm not a macro economist and this isn't an economics podcast, but I think there's a few interesting call outs and I'll just flick through these. And then I think we've got some interesting points around productivity to discuss. Our Reserve Bank Governor, Michelle Bullock, reiterated this week that rate cuts or calls for rate cuts are still premature. It definitely doesn't sound like rate cuts are in her short-term agenda, which could be painful news for a lot of Australians and potentially crypto investors looking for more disposable income to pump into markets at the moment. This spurred a pretty interesting little back and forth earlier in the week between Jim Chalmers, our current treasurer, and Jane Hume, our shadow minister. Jim Chalmers came out with some critique of the Reserve Bank for smashing households with higher rates during what is a cost of living crisis for many Australians. And Jane Hume came out in response and pointed out that potentially a lot of that is driven by government spending. And we've got a couple of interesting notes or interesting responses from our local Twitter on that as well. Australia released something which not many people might have heard of. The national accounts, the Australian national accounts, were released this week for their June update, and this is basically a report or some data released by the ABS, the Australian Bureau of Statistics, which integrates ABS micro and macro data to produce distributional information of household income, consumption, as well, and wealth. A little bit of a state of the nation in a bunch of charts, if you will. This caused a bunch of commentary that came out on Twitter this week, which again, I think is interesting to call out. Most notably, our fall in disposable income is the worst in the world over the past 2 years. You can see Australia in red here, falling very heavily over the last 2 years since 2022. And in the blue line, the OECD average, which is basically a basket of nations, including the US, the UK, and a few other leading Western economies. This is pretty brutal to see, and it wasn't the only bad news that kind of came out of this report, which, didn't paint our local macro state as something that was particularly positive. Another really negative call out was the woeful productivity that we saw in Australia, and we can see, particularly over the last couple of years, that really struggled to grow, and we're almost on par with where we were back in 2014 versus the US, which has had a pretty significant rise in labor productivity. Macro Business had an interesting article on this, which dived into it a lot more. They argued for two reasons why Australia's productivity could be so poor. The first is capital shallowing, which is essentially less capital per worker and increased congestion costs, therefore lowering overall productivity. And the second reason that they gave was reliance on government-aligned sectors, which again is that government spending that Jane Hume was very quick to point out in the Treasurer's critique of the RBA. Alex Joyner, who is I believe he's the chief economist at IFM Investors, dived into this a bunch on Twitter during the week, and there was some pretty good reading and commentary from some pretty significant Australian local macro commentators. He pointed out in particular the strength of government spending versus household spending, shown here in this chart, and maybe I'll zoom this in a little bit for you. Government spending in the green line has been really accelerating for the past decade, and household spending staying right around the average of the domestic final demand. So not necessarily painting a super positive macro outlook. If you do want to dive into this a lot further, there was a fantastic keynote put together by Matt Barry, who's the CEO of freelancer.com. This was a really good watch if you're interested in diving deeper into the macro side of things. But look, let's pivot optimistic. James, how can our digital asset sector, we work in crypto, and how could this potentially be part of the solution for Australia's productivity slump? And what do we need for that to happen?
Yeah, it's a great question. I mean, I'm pretty bullish on crypto and blockchain technology really over the long term. And I think, there are a number of benefits to the economy. Like, first off, financial efficiency. We see that blockchain technology can really streamline transactions, removing intermediaries, reducing transaction fees and settlement times, especially for like cross-border transactions where we know the status quo is things taking days and days and passing through a number of different banks locally and abroad. So I think, financial efficiency is one of the big ones to help increase productivity, access to financial services. We know that crypto gives or blockchain technology gives people access to financial rails, and there are a lot of people that are still unbanked out there, and their participation in the economy could help drive and stimulate growth. Something I'm really passionate about is the tech scene. So we've obviously seen a number of really strong startups come out of Australia in the crypto and blockchain space, but with proper regulation and structure from the government, that could really balloon out, and we see a lot of innovation in a number of different areas, right? And crypto allows for different funding models, and I'm really really bullish on decentralized apps coming on board and just giving people access to different services in decentralized ways. And I think there's going to be a lot of development there. And as you can imagine, with that development, there'll be job creation and skills development. So just increasing the population of people working in these sectors, again, feeds back into the productivity. More people working, more people generating value in the economy, more taxes going back into the government coffers, and more reinvestment. And that's, they're some of the main areas. There's also things like, improved traceability. So just increasing the efficiency of how we track things. So on the supply chain side, and just ultimately, like, the underlying technology with blockchain is the ability to execute smart contracts, right? So, we've got loads of people doing paperwork, executing trades, following up on payments. Blockchain technology essentially gives us the opportunity to automate a lot of that with self-executing contracts when predefined conditions kind of met. So, the example being, you're on a construction site, you hit a milestone, the funds are automatically released. And stuff like that can really help, I think, improve efficiency and help drive economic gains and productivity.
Absolutely. I think you're spot on. And it's so exciting to see so many awesome use cases for this tech that we can apply in industry and in the local economy to benefit people and to help drive us forward. Technical advancements are the core of productivity in many cases, and they're responsible for helping to bring down cost, and they are deflationary in nature in a lot of cases as well. But getting the regulation right is going to be really critical, I think, for enabling the first wave of digital asset businesses in this country to take off and grow. We've seen a number of really amazing local startups in this space who have found really fantastic product market fit. So we want to keep encouraging that innovation locally, and let's see what we can contribute as an industry to the local Australian economy. Are we normal, James? And will anybody ever love us? There's a couple of pretty funny studies that have been done about people who own crypto in the past couple of weeks. So let's jump into them. Are we normal?
Yeah, so I don't know how to feel about being invited onto this episode to discuss this topic in particular. I don't know what that says about me personally. But yeah, like you said, there's some really interesting studies that have kind of come out over the last few weeks, specifically around crypto holders and crypto traders. This one here in the AFR references crypto owners leaning towards having psychopathic traits. I think they surveyed over 2,000 people in the US, and crypto holders tended to score higher on measures such as like the need for chaos, paranoia, schizotypal attributes, dogmatism, victimhood mentality, things that you wouldn't say are great. But, in my experience and being in the community and talking to people, everyone does have this like humorous, like self-deprecating nature to them. We know that the industry is not everyone. Crypto is not for everyone in a market where your net worth can go up and down multiple times in the space of a day. I think it takes a certain type of person that goes against the grain. So yeah, this one was pretty funny. Maybe strikes home slightly, but I think, everyone that's kind of in this space is atypical, I'd say. And so, yeah, it's not all too surprising.
The next one, crypto was rated as less attractive to women than cosplay, than anime buffs, and a bunch of other definitely unattractive hobbies. What have you got for us here?
No, I have to say this one really hurt. No offense to like anime, cosplay. I'm not into it, but I know friends that are. But surely there's more redeeming features in crypto, especially over the long term. I think, being part of the community, doing your own research, just even having a trading mentality, and like you said at the top of the call, just understanding the macro, understanding politics, understanding what's kind of happening in the economy. I think all crypto traders and holders do all of those things. And I think that is a redeeming feature. And I like to think that that's being seen from the opposite sex, but clearly not. I mean, if you look at the things that win out, reading, learning a language, or an instrument, I get it, but surely crypto should not be that far down the line. They do say in the article that you should follow your passions and like have your hobbies for your own reasons. And so I think yeah, this one just makes me want to connect with the community more, because essentially no one understands us apart from ourselves.
I think that's a great point. I think I learned guitar in year 8 to try and get a girlfriend, and it wasn't very successful. And now I make my wife watch Michael Saylor videos for hours on end, and she's still with me. So I don't believe the data. And even if somebody does love us, how do we leave our crypto to them when we're gone? This was a really interesting one that came out during the week. James, what can you share about crypto and wills?
Yeah, so this one was quite interesting. It's not something you see a lot of information on, but apparently the number of Australians leaving crypto in their wills has doubled into 2024. I think part of that has probably got to do with the market uptick. I doubt many people will be rushing to put crypto into their wills when the market's on the downward. So that's kind of encouraging, but it's good to know that people are thinking about this and putting it into practice. It's something I think about quite often, given the fact that got crypto across different ledgers, got different wallets, obviously got crypto on centralized exchanges. When I do pass, how a loved one could get access to all of that in a seamless way, instead of me putting down notes on a paper and like seed phrases and where to go and what to do. It's still a problem I don't think has been solved. And so, yeah, really keen to hear from the listeners if they found a product or service that they've used or are using. Really keen to hear what innovations kind of happening in that space. I think it's an area that's not really talked about as much as it should be.
Absolutely. Succession planning is critically important. So would encourage our listeners to make sure that they have at least some ideas in that regard. Well, I think that brings us to the end of our topics for today. I'll end with a quick disclaimer. Please note this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and isn't responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance. James, thanks so much for jumping on. Great to hear that maybe there's a little bit of light at the end of the tunnel for us crypto bros. And yeah, we'll have you on again soon.
Thanks, Liam.
Catch ya.